appreciate the relationship with Loudon Water. Management is always excellent to work with. So just wanted to express our appreciation for the relationship and the attention that management gives this. So you would not want me to go through the financial statement audit as the IT guy, but Brad Tomlinson is with me, who has about 8 or 10 years or so in public accounting, has been working on Loudon Water's engagement for the last several years. And if I can spoil it for you, all of the reports that you hear about were very good. So the opinion is unmodified. There were no control deficiencies in anything that we found along the way. But I'll stop stealing Brad's thunder and let him chat about it.
You already stole it.
I know.
That meets both audits.
Yeah.
The special audit and the general audit. So I'm really
It might be
happy.
fun to have the IT guy go through it.
It would be, yeah. So Brad, if you want to talk through that, and I will.
Thank you.
Do this many times.
Either way, either. Well, thank you, Brian. Yeah, like Brian mentioned, my name is Brad Tomlinson. I've been the manager on the Loudon Water engagement here for the last 3 or so years. And previously was with another accounting firm for the last 4 years prior to that. So like Brian mentioned, management's great. We really appreciate Sally, Donna, Brian, just everyone's great to work with.
And Brad's great to work with too. I was just telling him before, Donna and I have questions and he's never, what are you asking? So they are delightful to work with as well.
I think Sally and Donna, they may be the most responsive clients that we have on the SureLink portal. I mean, sometimes we'll post questions and they'll have a response there within an hour or two, which is pretty rare. So we really appreciate their hard work to make sure that the audit goes so smoothly. I think they have the same level of dedication throughout the year because we really don't have, like Brian mentioned, is a very clean audit and don't have a whole lot to note today. So I guess the first slide that we'll come through here is kind of just an overview of the audit as a whole. So this year we did begin the audit a little bit earlier so that Sally and Donna could have some extra time working with the new software to make sure that the numbers were finalized in time to get that set up. So we began the audit on March the 3rd and we were able to make good progress and got the audit wrapped up quickly. As Brian mentioned, the kind of first opinion that we have on the financial statements is related to the annual comprehensive financial report of the ACFR. Which was an unmodified opinion. So that's the highest level of assurance that we can provide on a set of financial statements. In addition to that opinion, we also have our report on internal control over financial reporting. So this is going to be the government auditing standards opinion that's required to be completed due to the nature of the The fifth bullet point there is the APA, which is the Virginia Commonwealth Auditor of Public Accounts, specifications for audits of authorities, boards, and commissions. So we also had compliance requirements that were tested in regards with that. Again, no issues, no findings or anything of that nature. And then there was an overview of IT general controls, which Brian and his team worked through. So if Brian has a little bit of information about kind of the work that they did there.
Yeah, thanks, Brad. Similarly to what we've discussed in the past, every financial audit is flowing through some sort of IT system, and if the numbers coming out, if the system that the numbers are coming through has problems, you place less reliance on those numbers. So we have a team of internal subject matter experts that looks at a lot of IT general controls and really any control that could affect the outcome of those particular numbers. So we did that. I think we looked at something like 30 or 40 pieces of evidence around the IT controls. We looked at the governance of the IT structure within the entity, which can have a pretty significant downstream impacts. So we looked at that. We looked at both the information technology controls at a high level, but also the OT controls, the operational technology controls as well, just because, if you were a bank, we would be thinking about customer information, but you're not a bank. You do have customer information, but if you can't deliver water, if there's poor security around that OT environment, then you're not fulfilling your responsibility. So while it feels a little bit weird to look at OT when you're in a financial audit, we do look at some of the basic controls around that. We looked at results of penetration testing to make sure that those were satisfactory. We had no issues there. It was a good look at the IT security, and we had no findings, recommendations, no control deficiencies or anything like that. So that's the high level overview of the IT section.
Did you review, Brian, if there's a denial of service or there is some other kind of ransomware or something like that goes on? Do you look at those plans?
The controls that we look at as we execute this IT understanding process would address some of those. We do ask those questions. We have they're sort of the scary questions at the end. Did you have any cybersecurity issues that were addressed? Did you have to implement your business continuity plan in any capacity? And all of those responses were no. We would also pick up on that. We actually do a fairly comprehensive cybersecurity questionnaire, which is far more than is required for our minimum standards for doing this type of IT understanding. In fact, we pull that questionnaire in from our SEC clients, from our public clients. So just knowing how mature the control framework is at Loudon Water, we wanted to make sure that we're going a little bit farther than we typically would. So we go through that questionnaire, which looks at things like incident response. So we evaluate the incident response program to make sure that if a ransomware attack happens, that the IT department is equipped to respond to that. So we do look at that. The results of the penetration test that I mentioned would speak to that as well. So that's the long answer. The short answer to your question is yes, we evaluate that.
You're the IT guy, so.
Yeah, so it's going to be maybe a little bit of an odd question. I'm personally very proud of the SAP implementation we have and how it's done in the cloud and all of that. And because we run our business on it, and we rarely have, and as far as I know, we've never had any incidents or any problems with those. What's your opinion in comparing to, say, other organizations our size that use either other tools or SAP?
I could say without hesitation that the maturity of the control environment is far more mature than a typical water utility. In terms of the implementation of SAP, it's very well protected in so much as the IT general controls that we look at. We also look at what we call application controls and making sure that privileged users are appropriate to the SAP system. We look at the process to provide users access, make sure that access is appropriate for their job function, and probably more importantly, looking at the process to revoke access when employees leave the employee of the company. So, that process is very critical. So we make inquiries and we look at some evidence around that as well. We make inquiries about how management reviews those user permissions within SAP, because if you give everybody full privileges and full administrator access, then you've not really solved any of the security problems, because then everybody can do everything. So you want to make sure that each person can just do what they need to do. So, we don't do that. We make sure that management is doing that and doing that on a more regular basis, at least annually, sometimes biannually. There were no concerns that elevated in the security of SAP and the implementation of SAP. That's where we were.
That was a migration that went on this year too.
Yes, of course, there was a lot of time and energy spent. And of course, we were looking at 12/31/24, so that was really what our scope was. So we'll take a deeper dive into that at the end of this audit period.
Good deal.
Just a question for Mike. Do you all do drills or training for ransomware? What happens? What's the first thing you do? who does what, who can't do what, you know?
Yeah, we do a
Whatever.
couple of things. So we do incident response tests,
Uh-huh.
and we've done that a couple of times over the past 2 or 3 years, where basically we go through our incident response procedures. So if we had a ransomware attack, for example,
Mhm.
what's step 1, 2, 3, 4, and then separately, okay, so that becomes a disaster, and that invokes our disaster recovery plan. So what is our disaster recovery plan, which varies depending on the technology that's affected, but we exercise that as well. So we've been through both types of exercises.
You contact the person who's doing the ransomware. Does somebody have a contact with that person or do you?
So we would typically work through, there's a sort of a web of how we would go through that. We would
Uh-huh.
actually contact our insurance provider
Yeah,
first, and then
exactly.
they would
Okay.
invoke legal counsel, and then they would bring in a forensics firm. And typically that forensics firm has expertise in negotiating with
Yeah.
with a ransomware, entity. And our typical stance is we would prefer not to negotiate. I mean, our position is that we would not pay a ransom. I think it would really be up to the board, if it got to that point where, we thought, oh, maybe we do need to consider this, that we would have to pay it. But really, that's our position, is we would not pay a ransom.
Okay. All right. Thank you.
And your responsibility is for both business IT as well as to control IT.
That's correct.
Yeah.
Yes, IT and OT. Yep.
Thank you.
Any other questions on the IT aspect or any of the testing that we did around that?
It's very important to
Yeah.
review every year.
It is,
Yeah.
it is indeed.
It is.
Brad, back to the numbers.
All right, next slide.
Should we be pointing?
Oh, I guess it's a PDF. Okay, so we'll just roll.
Okay.
Oh, yeah, use the wheel.
Okay, perfect. So yes, this right here is the required communications, which are standard audit communications that we are required to report to you as the board at the conclusion of the audit. So a lot of this information here is kind of standard, kind of boilerplate language. We'll kind of cover the highlights here. If you have any questions about anything, just stop me as we move through and we can handle those as we get to them. So the first two sections there are kind of just covering our responsibilities as outlined in the engagement letter and the pre-audit letter. And then the bottom portion of this slide is kind of going over accounting policies, practices, and changes in policies. Really, the main area there is going to be the adoption of GASB Statement 101. This is a relatively kind of somewhat minor update to the accounting standards, which is, more easy to adopt than in the past years where we've had leases and subscription IT arrangements. But GASB 101 essentially is just kind of updating the requirements for the accruals around the compensated absences. So just kind of adding some items that are included in compensated absence accruals now. Overall, like I mentioned, pretty minor compared to some of the more significant policies that we've implemented recently. Next slide.
Forgive me real quick, compensated absences, that's not a term I'm familiar with.
Yeah. Yeah, so just basically pay time off, things like that could be paid out, earned by employees, but not yet
Just double checking.
paid. So yeah, just added some benefits and tax and things like that to the accrual. So.
Great. Thank you.
So this slide here is largely focused on accounting estimates. As is consistent in prior years, any set of financial statements is going to have estimates that are kind of baked in. There are three significant ones that we considered for this year that we're kind of pointing out. The table is just going to break down the accounting policy, how management does the estimate, and then our basis for concluding that the estimate is reasonable. The first of which is unbilled accounts receivable. So these are just receivables that have been earned for 12/31/24, but were not billed until 2025. So there's an estimate to record those. The next one that we get to is pension and other post-employment benefit liabilities. So these again are just pensions and health insurance, various benefits that the employees get at retirement age. So these are estimated to a liability as of 12/31/24, consistent with prior years, and no significant changes for those. And then the final one is depreciation expense. Obviously, there's quite a few capital assets that Loud and Water maintains, and the depreciation is an estimate of the useful life of this. The next page we come to here at the top is audit adjustments. So there were a few audit adjustments during the year, which is not out of the ordinary. There's a list of the adjustments attached, but high level, the adjustments were to adjust the other post-employment benefits and accruals that management provided during the audit process, an adjustment for bond amortization provided by management, an adjustment related to the FEMA grant. So this, as part of the compliance audit, we did look fairly heavily at the FEMA amounts. And so there was just an adjustment to record a receivable for some FEMA expenses that were incurred and recorded in 2024, but the reimbursements and the revenue was not submitted until 2025. So we just made an adjustment to record a receivable to show that revenue with the expenses. And then just a very small adjustment for principal and interest on a loan. So the net effect of those was an increase of approximately 2.5 million on net income, largely just due to that FEMA adjustment to bring that revenue into 2024. Uncorrected misstatement. So there was one uncorrected misstatement this year. So what this is just an adjustment that was identified by management, but in conjunction with us, determined that it was easiest just to wait until 2025 to correct due to when it was detected, and also a relatively insignificant dollar amount for Loud and Water. This was just an item that was included in both accrued expenses and also in retainage payable. So just an item that's booked twice in the liability account. So it's just an item that'll be corrected in 2025. And the final section there is just supplementary information, just a paragraph that we have to include there about the supplementary information being included in the report, but not subject to our full audit procedures. All right, so this page here is a lot of information here is not applicable. We did not have disagreements with management. We did not have consultations with other accountants, no significant issues, no significant difficulties, or no matters that required consultation outside the team. So very, very good news there. This slide here and a little bit on the next slide is just covering independence. So as your independent auditors, we're required to be independent. This just outlines the kind of procedures we have in place related to that. And then just also items that we would request that you all provide to us if you're aware of any breaches of independence that could impact our relationship. And then the final line here is just referencing the representation letter, which is kind of the only communication that we have attached this year. Like I mentioned before, generally there is also a management letter, which would go over any internal control suggestions or recommendations. This year, due to some improvements in processes, there were no suggestions. So one less item to attach here. So that's good news. This slide here is going over upcoming GASB pronouncements. So these are going to be accounting standards that will be applicable in the next few years that we're all kind of working through and we'll have implemented as they're due. Really, only the first one is implemented for 2025. This one is related to risk disclosures, GASB Statement 102. And so this is again one that's not too significant to implement. It's not going to be, I would not imagine, too much of a burden, but largely kind of just enhancing disclosures around any risks that the entity may have in their business operations, concentrations of revenue or anything like that that could impact operations that are kind of not ordinarily disclosed. So it's just an added disclosure there. Kind of have plenty of time to look at that one and get that implemented this year. And then the next two GASB standards are not applicable until 2026. This page here does have just the audit adjustments kind of listed out in further detail. As mentioned previously, the first entry is just a true up for other post-employment benefits and a accrual for an invoice that was provided during the audit. The second one is just a entry for bond amortization, a true up as well, just related to the new bonds for 2024. The third entry you see there is the receivable entry related to the FEMA reimbursements. And then the final one is just a minor $42 adjustment related to bond interest and principal. And the next, I believe, 5 or 6 slides are just the representation letter. We're kind of just required to show you this. It's provided to us by management at the conclusion of the audit. And then that really covers everything. Like I mentioned, it was a very successful audit. We really appreciate the team's help. The responsiveness of Brian, Sally, Donna, just everyone involved is very, very good to work with. We really appreciate all of their help to make this a successful audit. The audit's not an easy process to go through. Very time consuming on the team's behalf, but they did a great job and we really appreciate their help. So.
General question and then a specific one. In general, you look at the representation letter and then through your presentation slides that are in the packet, there's a couple references to contracts. I think in the representation letter, if I read it correctly, management made contract information available, and there's several references, several of those 76. What degree, the general question is, what degree of detail you get it to look at that? which leads to the specifics of $862,000. When you read one section, uh, reverse the double accrual of the Meridian expense, which was reported in year end. Teenage payable of December 30. Is that like a contract expense that was just double counted maybe?
Yeah, I can explain that. So at year end, we go through a process where our accounts payable and out in the field, they flag for us any expenses that are due in 2024. So we actually have a system where they label them 2024 expense and we accrue for those. So this fell in that, it's a contract expense and it fell into there. So we accrued for it, not realizing that it was actually a release of retainage payable. It wasn't noted on the invoice that this was a retainage payable. So that we accrue for as the expenses come in. So that's how the double accrual happened. Yeah.
But then to the more general question, how do you review, or what element of review do you undertake relative to contracts?
Right, so obviously, a lot of the contracts are going to be capital asset related. So our testing related to capital assets is largely going to be sampling, using our sampling forms to determine an adequate sample size based on dollar amount of capital additions during the year, and then pulling the invoices from the client to make sure that the amounts recorded are correct, the time period is correct, that they're valid capital additions during the year, essentially. So as part of that process, we do sample quite a few of the invoices. On that test, we're largely looking to make sure that what is reported on the balance sheet as a asset is a valid asset. So that's a lot of the contract related work. Specific to federal awards, those contracts are looked at more in depth because of the compliance requirements surrounding them. And those are largely, funding this year, the FEMA funding was what was major program based on the dollar amount of the program. And so those contracts are obviously looked at with more scrutiny just because of the compliance requirements, the testing requirements that dictate how many invoices we have to pull. And so particular to the federal funding, they're always going to be looked at if the single audit is required more in depth because the uniform guidance requirements dictate that we scrutinize them more heavily. So in particular, the federal ones are always looked at more heavily by us in the years of the single audit.
Maybe this, you were to think about all of the contracts that are issued in a year, the percentage at the eyes of the audit have on those, all of that number. Is it, if you mentioned capital assets, so if it's a contract related to a project, you would think you would pick it up, but would you really necessarily pick up in your audit all contracts, a significant percentage?
It would not be all contracts. It's going to vary kind of on the mix. Anything that's based on materiality considered an individually significant item, an individually significant capital asset addition we will look at. And that'll vary based on the number of additions during the year. And then from the population that is not considered individually significant, based on our sampling forms, a certain dollar or a certain number of those are picked as well. So it's kind of hard to say a percentage, I would say, but essentially anything that's considered individually significant based on materialities to the organization as a whole, we will look at that from the asset side to make sure it's properly capitalized. But we're not necessarily, like oftentimes the contracts are a couple hundred pages long, depending on the agreement. So we don't read every page of those. Our focus in that aspect would be largely related to asset capitalization, making sure that there's not an asset on the books that's not properly supported or properly recorded by an actual expenditure or contract agreement, something of that nature.
You have a question? So with our single audit, since I think it's the third year, and assuming it is accepted, we then drop down to a lower risk category now, 3 years in a row, if it's accepted.
Was it 3 years or was it 2 years?
Is it 3 years or 2 years?
It's actually 2 years. So you were classified as low risk auditee. The way that your CFA, your schedule of expenditure of federal awards has been historically, the low risk, high risk determination didn't have a major impact because that essentially dictates what percentage of federal funds we're required to test. High risk being we have to test higher percentage, low risk, test lower percentage. So much of the funding is concentrated in the FEMA program that essentially we're testing that program generally most years unless you have a new one or the FEMA kind of drops off. So, but yes, you were low risk this year.
Okay,
Yeah, and that-
fewer questions.
We hope that funding continues.
Yeah.
Yeah.
We still have funding available, so I expect we will have one next year.
Next year.
Or this year.
Yeah, okay.
Else? No questions?
Nope, no questions.
Okay, good report.
All right.
Thank you. That's great. Another year.
And now do we move on to the finance? Committee?
Yeah.
Unfortunately, I have to leave. I just been waiting for,
Okay.
I know that Terry.
I guess I have to exit the audit committee, right? Or is this a joint meeting?
I don't know. It's, Joel, do
Do we need to exit the audit meeting?
Do we need to exit the audit meeting? Because we won't have quorum when I leave.
Terry is trying to log on online right now, but, since it's a joint meeting.
We're
I
okay.
think we can continue as the finance.
Okay.
All right.
Congratulations, Sally. Good job.
Yes.
And your team as well.
Thank
I know
you.
That's a lot of work. And Mike as well. The SAP went well, so
Oh, yes.
it's a good year. Real good year.
Yeah, so now I'm going to show you all the draft ACFR.
Okay.
So this is
Looks
it.
great, by the way.
Oh my gosh,
I love
we
the
said
park.
best year ever.
Yeah.
So of course, as a reminder, the theme and pictures are Sue Crosby and her team. So Sue's in the back there. And she also arranged this day so that if you wanted to head to the park after and see these butterfly roofs in action, you might see something like that today.
Somebody's,
A little dark and mysterious there.
So a shout out to Apertures too. That's who we contract with to do our printing and photography for the ACFR. So the theme is the rain to reservoir. So you'll see on the pages, the flow of the water from the roofs to the reservoir itself.
Sally, I'm sorry to interrupt. I just wanted to acknowledge that Chairman Allen is logged on online now.
Great. Hello, Mr. Allen.
Welcome, Terry.
And then it captures it in the basins below. As I'm sure you know, but there are 3 sections to our ACFR. So we'll have the introductory section, the financial section, and then the statistical section. Another of the great pictures. This is our letter, and I just wanted to pause here and actually read this last paragraph. So this report has been accomplished with the dedicated services of the Division of Finance. We would like to express our appreciation to all employees that contributed to its preparation. We'd also like to thank the board that remains committed to fiscal integrity and financial leadership. So I've said this before, but I don't do this alone. Donna Kovalyuk is in the back. She's one of my right hands. She's the accounting manager, been at Loudon Water since 2012. So this is her baby, and she did a great job this year. IT, of course, thank you. They have their own audit going on with ours. HR is heavily involved. Sue's team, of course. So it starts back in December with the inventory, and then we have all our prepared by client items before the March is due. So we have like 200 items due. The whole finance team, it's a machine. We know what to do. We get it done. And they did it this year with the S4HANA trainings and classes too. So shout out to everyone who helped. There you are. Part of the introductory section too. And as Brad mentioned, we will submit this once it's approved by the board in June, and hope to again achieve the certificate for this audit this year, 2024. Our organizational chart, and then we'll move on here to some highlights of the financials for you. So assets exceeded liabilities by 2.1 billion, and that's referred to as our net position. So 80% of this reflects the net investment in capital assets. And it was an increase year over year of 147.8 million or 7.6%. Moving on to our operating revenues. Here's a chart that will show you the trend over the years, but I'll just talk about 2024. Here's our operating revenues. They increased approximately 53.2 million or 42.6% when compared to 2023. And 80% of this increase was due to the compensation we received from an easement agreement. And it is pointed out in the verbiage and the notes to the financials, as was mentioned in one of our previous meetings. So it should be clear to the reader what that increase was for. Water usage was up 6.5% year over year. And we also had the rate increase. So those are the drivers for the revenues. Moving down to operating expenses, those increased 1.5 million or 2%. And this is attributed to increases in our contractual services. So our purchase of water, wholesale water and wastewater. Total operating expenses went from 78.6 million to 80.1 million. The line we're on now.
So big picture, total operating expenses, you said it's up 2 point, whatever that was.
2%, 1.5 million. Mhm.
But we sold 6%, something like that, more in water this year.
Yep, 6.5% more in water. And we had the rate increase and we had the big compensation for the easement agreement, which is 80% of that increase.
Yeah.
In the green line here. The green
Right.
bars.
So is that just like real high level? Is that just sort of an economy of scale that we can sell more water without having the operating expenses sort of follow suit?
Well, this year it's going to be because of that easement payment
Okay.
that threw that out of whack. So if we
Okay.
took that off, we'd be
It'd be
a little bit more.
more on par.
Yeah.
And it's also important to remember that a portion of your rate is recovering R&R expenses.
Yep.
So it's not,
Okay,
you wouldn't expect the same percentage increase just from operating.
Okay.
Yeah.
makes sense.
Yep.
Thank you.
Depreciation expense increased from 67.6 to 70.2. And then non-operating expense representing mostly our interest expense decreased from 8.2 million to 6.7 million. Bond issuance costs for the bonds we issued this year, 436,000. We had a contribution from government this was the Two Creeks parcel from Nova Parks. So that's the 900K. And then non-operating revenue decreased overall by 456,000. That's our investment income, our market value adjustment that we book at year end. And then we have capital contributions. So it went from 62.9 million to 107 million. Again, we had strong availability charges last year. So that's 80.8 million of that. Deeded projects, contributions, Loudoun County, our FEMA reimbursement, all that rolls into our contributions to and from government.
The Two Creeks was valued at 920.
That was what the appraisal is. It's more valuable than that to Loudoun Water.
Okay. Yeah, because my recollection is we had talked about much higher numbers than that when we were doing that. Okay, interesting.
Some other highlights, customer growth is higher than budgeted. We had 5,940 ERCs versus the budgeted 2,918. Principal and interest paid on revenue bonds was 19.1 million. And outstanding revenue bonds was 177 million as of the end of the year. And there will be your principal payments that we have phased out for the next years. Our investment portfolio was 418 million with an average yield of 3.43% in 2024. And then we have our the bulk of the financials here. The notes to the financials, which should be read in conjunction with it. All of these notes, a lot of these pages are our plans with VRS that we have to show. And then there's our required supplementary information, which is on our OPEB expenses. And then finally, we have our statistical section. And that's going to give the reader more information to judge the financials with. So that'll show some trends and our rates and population and all these fun things. FTEs. And so after the board approves the next steps, I'll take this to the board in June. And if it's approved for distribution, we have to file with all of our bondholders and VRA loan holders. We'll file for the GFOA certificate. And then we'll put it in print for a couple print copies, and that'll be it for the 2024 audit. Can I answer any questions?
Yeah.
Yeah.
And first of all, I think the report looks really good and full of good information. At times, sometimes you have to think about the other people who see this other than us, like it's prepared for a reason and it's presented to us. However, if you look at that revenue line, it's very, very strong. And you feel really good about it. But the public, or maybe perhaps the public or our customers might say, wow, they jacked up the rates and look at all the revenue they got. When really it's not exactly, like, it's a part of it, but really that Dominion issue is the driver.
Right.
So-
So hopefully they read the notes.
Well, hopefully,
Yeah.
that therein lies the question. Is there any communication that we do think about doing with this? Is it just completed, finally presented to us, finally published, publicly available? What else do we do with it? Do we think we need to do it? Definitely we don't.
Generally, we don't. We publish it out there and hoping that the notes are an integral part, and it is explained in several sections. So that's the first part where we explain it. And then in the trends in the back in the statistical section, because it does stick out, we also footnoted it so that forevermore, right, when they see this jump in operating revenue, of course, I won't be able to find the right schedule. I think it's here. I think these tiny words are, but I'd have to see. So we explain it also. Oh, that's not it. But we do have it footnoted in the trends also. Oh, that's debt.
Yeah, I think it is what it is, and it
Yeah.
seems reasonable, and the product looks really good to me. I wonder about when we make these things available to people who aren't us, what they see.
Well-
So you stated, it's in there, read it, there's footnotes in it, so I think I'm okay.
Yeah, and if we got questions from the public, of course, we would respond to them. You know, it does say reach out to Division of Finance in there if there are any questions. So that's, I believe, my number, maybe.
It's a great point, Mr. Yudd. And we did receive questions when we went through the rate process
Did.
last time, similar to what you're pointing out right now. And I think we've always, and not just us, but a lot of entities that put out ACFRs and have to put these out, they've become very hard for your customers and consumers to really understand. There's so much required in there now that it's become a burden to them really to read through. And so there's probably more detail that would be gained if they would read it and call us, and we would have a conversation with them. But I do think it's a great point that there's information in there that, even similar to Mr. Campbell's question, you know, why did your operating revenues go up not in conjunction with your operating expenses? Well, they don't know that part of your rates are recovering R&R, which is in a different section. And so, excuse me. So I think it's a great question.
Yeah, I think the question might come from those individuals who had questions about the rate increase.
Absolutely. Yep.
Why did you need such a big increase if you had this, as they see the easement,
Mhm.
if you had this easement, which offset, you know, the need for some of that increase, at least in the first year?
Yeah.
I would maybe anticipate. Have you gotten questions in the past from customers? Do many customers, I mean, this is available to public document. Do many customers look at this? Do you know, have you had any experience with that?
I think probably when we went through the rate increase,
increase,
it's on
sure.
our website. I think the last 10 years or so are available on our website. And I don't believe we usually get any questions related to this. We did get some when we went through the rate increase as folks were scrutinizing a little more, but typically we do not.
Anticipate that happen, but offset of that is, well, if the water main breaks in front of your house, do you want us out there a week or in an hour? You know, Any other questions? Right. Thank you, Scott.
Great.
And then finally, we'll have just a quick review of April financials. Again, it will be the last month that you see draft. We'll be able now to roll our depreciation into actual. So operating revenues as of April totaled 42.1 million, which was above the forecast of 39 million. Non-operating revenues were 49 million, which was above the forecast of 15 million. And that was due to those data center connections that rolled in to January, which I'll show you the chart in a minute. Operating expenses of 54.4 million are below forecast by 5.1 million. And then here's the ERCs where I kept saying the numbers, but here, if I took out those January data center connections that rolled in, that's where we'd be. So it puts us a little bit more in line, but I'll be able to adjust this during mid-year review to bring that forecast line up. The majority of those were data center connections. And then as of April, our capital expenditures was 42.6 million over our forecast. However, that's just due to timing. We're not forecasting that we're going to overspend our budget. It's just acceleration of timing. And then this is our breakout of availability fees funded 12 million and user fees funded 4.5 million for April. And that's all I have. Happy to answer any more questions.
I think time to time, in many different topics, we raise the issue of that, that volume and that high activity and that high dollar amount associated with data center probably peaking and going in a downward direction at some point. What do you see as the turning point? We know that there is another dimension, which is what is happening with regard to new data center development and during the county's consideration of changes to their development regulations, a lot of people filed, had reviewed and approved data center site plans. Some of those are still going through the process. It takes, you would estimate like a year or so for a site plan. It's probably 2 years because of many different reasons. But at some point, that supply of land where it's a good fit or a clear path to data center approval, that's shrinking. So we're still seeing this tremendous growth. This is really through April. What are you seeing, and what do you think? What are you seeing for the future, and how would you prepare for that?
Well, what I can tell you is we're very conservative. So in our 5-year plan that you saw, we're keeping it flat. So around 2,000 ERCs a year. When will that actually be a proper forecast?
I think my assumption is in line with yours, is probably in the 1 to 2 year time frame. You start to see a tail off. How we're preparing for that, I mean, I think we build our capital assets in advance of the growth being completed. So the theory is we'll still be collecting availability charges for the next 30 or 20, 30 years, however long it takes to get to full build out, even when Broad Run is built. So even when connections slow down, we're still going to be gaining money to help pay back our expense up front. How big that drop off is will determine how big our borrowing will need to be in the next 2 to 3 years. But we'll have to see what that looks like in 2 to 3 years. Yeah. Yeah.
I think one observation years that we had the JLMA expansion planning,
Mhm.
as soon as that signal went on, you're gonna serve this area, plan for it and plan for the facilities, plan for the construction of the facilities, plan for the cost of that construction. At that same time, we were enjoying this trend of high data center activity, dollars rolling in. If we had another policy expansion, weren't in such good times, positive financial times, there would be some repercussions
Mhm.
and some opportunity costs on us. So I'm always thinking about that type of thing.
Mhm.
What do we do? What do we need to do to prepare for it? And I've raised it several times, and I think it's permeated around the thought process. But I think at some point, we're right now approaching mid-calendar year of 25.
I'm sorry, Mr. Yudd, is your microphone on, sir?
Sorry.
Okay, I apologize.
So thank you, sir. So we're mid-calendar year of 25, and let's say it's a year, then we have some time to think about it.
Mhm.
But we're convening every month from a finance committee point of view to look at these things and to talk about them. And so I think maybe that whatever future steps you are contemplating needs to start coming into our dialogue at some point. Not to raise an alarm bell, but just it's a trend, and the trend is going to go in another direction probably. So anyway, whatever commentary you have, Brian or Sally, about that, even our guests today, if they have seen trends in other jurisdictions that they've worked in.
I'd like to add one note, and I think, Mr. But just to make sure it's out there, there's a couple dimensions to this, and the data centers particularly. There's the county level approvals, which approves these at the full site. And then we see connections over time, so while there may be, sort of a point where the county isn't approving them as much, then they build out over time in phases. And so we'll continue to see and collect availability fees over a longer period of time. So for us, that will be a little further out when we see that decline.
Is we've talked about this before, and I think I know the answer, but the future reduction is coming from the county. It's not coming from the industry, because the industry is going the opposite direction with AI and so forth. They need more power.
Yeah, I
need
think
more computing capacity and so forth. And so it's coming from the county.
right.
Is that right? It's not industry.
I think to Mark's point, if you had a data center site plan approved through the county review process, that's probably going to get built
Right.
because of the level of investment, the cost of land.
Mhm.
That will take some time after approval to actually come through the construction process and then go online. I don't see a lot of possibility of data center approved site plan, and I'll hold it for a while if I'm the owner, if I'm making
Yeah.
decisions about that. So then that universe of available land is shrinking, and if where do you go? You go elsewhere.
Yeah. I imagine the land cost is
Increasing.
as well. So
Yes.
it becomes unprofitable to come here as opposed to somewhere maybe in the Southwest or something. With the concentration down there as well. Kind of losing our gain.
I would just add, it's a great question and a great comment. And, from a financial standpoint, not looking at if a policy change, your rates, you've designed them they're fully recovering your operating costs. You've shown a willingness to raise rates to recover your operating costs. You've designed them to recover repair and replacement costs for future rehab projects. You have very strong cash policies, as you've heard from Davenport. You took out the availability charge revenue for one of those policies per Moody's suggestion. So I think if you're just looking at the financial picture on a day-to-day operating basis, if growth was to stop, we're not reliant on growth to fund our daily expenses, but that doesn't answer your question of if there was a policy change. Yeah.
Good point, Brian. Any questions? Just for Brian and Brad, thank you very much. We appreciate you guys. Your firm always does an excellent work, and tell Jennifer we missed her. And I thank her for her good work as
We'll
well.
convey that message, and I know that she would say the same thing about Loudon Water.
Yeah.
So thank you so much.
She's always been very gracious about that. Terry, did you have any questions? Didn't mean to ignore you.
No, I'm good. Thank you.
Okay, thank you. All right, I think that's it. We'll motion to adjourn.
Thank you.
I'll second. All in favor?
Aye.
Okay, we're adjourned. Thanks again.
Thank you.